Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover Series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like ADNOC or Salik Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code Blockchain DXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Now, let's talk about startup.oi. A global tech platform transforming how engineers connect with opportunity. They offer high-paying, remote tech jobs that give you complete flexibility in location and working hours. On top of that, Startup.oi hosts free global events, meetups, and tech talks designed to help you grow your skills and network with other professionals across the world. What makes them stand out is their commitment to community, especially in emerging spaces like blockchain, Web3, and the metaverse. Whether you're just starting your career or you're a seasoned dev looking for the next opportunity, Startup.oi gives you a platform to learn, earn, and grow. You can download the app from the Google Play Store or Apple App Store, or just click the link in the show notes. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Okay, let's unpack this. Today, we're diving into a whole stack of fresh sources. We've got everything from official government data to some really cutting-edge industry insights, and it's all centered around these pretty significant shifts happening in the digital economy. Our mission, like always, is to kind of cut through the noise, pull out the most important nuggets, and give you a shortcut to being really well-informed on what's shaping things.
Exactly. Yeah, we've got the latest inflation numbers that, well, definitely sent some ripples through the markets. And alongside that, some fascinating stuff happening in crypto. Think major financial institutions rethinking their positions, new regulations taking shape.
Right.
So yeah, this deep dive is really custom tailored for you. We want to help you understand not just what happened, but maybe why it matters in the bigger picture.
Okay, so what are we getting into today? We'll kick things off digging into that recent inflation report, the numbers, the immediate market reaction, what it means for Bitcoin and other digital assets. Then we'll pivot to some, honestly, groundbreaking corporate news. We're talking massive moves into Bitcoin treasuries, Jamie Dimon's surprising take on stablecoins.
Yeah, that one's interesting.
And this ambitious new project called Tokenize America. Then finally, we'll kind of zoom out, look at the global crypto market pulse, and touch on some really exciting developments coming out of Dubai and the Middle East. It's a packed session, so let's get started.
Let's do it.
Okay, first stop, the big economic news from July 15th. So the U.S. inflation data for June 2025, it dropped yesterday.
Yeah.
And it looks like inflation picked up pace, but, only marginally, just 0.3%.
Right, a small increase. But the immediate market reaction, well, it was pretty negative for Bitcoin and crypto prices initially. Just a few days before that data, Bitcoin was, around $122,000?
Yeah, hovering around there.
And after the report, it settled closer to $117,000. Though it's worth noting it was actually around $116,000 just before the release, so there was some volatility right around that announcement.
So that slight uptick, it still challenges that digital gold idea for Bitcoin, at least in the short term.
Well, yeah, it highlights that ongoing struggle Bitcoin has to consistently, decouple from traditional markets when news like this hits, even while we see this long-term institutional adoption growing.
Tension, right.
Yeah.
And actually, a crucial point comes up when you look back at, say, the COVID era or even wartime periods. Bitcoin prices actually fell then.
Right, I remember that. Not exactly an inflation hedge in those cases.
Exactly.
Yeah.
But here's what's really noteworthy. During those same periods, the volume of stablecoins really picked up pace, accelerated, actually. So you could make a pretty compelling argument that stablecoins sort of functioned as the safe haven against both inflation and crypto volatility. That's a really interesting counter-narrative. So less about Bitcoin, more about stablecoins in practice during those times. And just for you listening, a quick reminder, inflation is measured by the Consumer Price Index, the CPI. The official source is the Bureau of Labor Statistics, the BLS. They track average price changes for like a whole basket of goods and services for urban consumers.
Housing, energy, transport, healthcare.
Right.
It's all in there.
Right. They collect prices from thousands of places, adjust for seasonal stuff, and boom, you get the index. The percentage change, that's your inflation rate. We won't get bogged down in the methodology, but knowing the basics helps.
Absolutely. And this data is crucial because it feeds directly into what Federal Chair Jerome Powell will be talking about. Him and the Fed committee, they've got their meeting coming up July 30th to decide on interest rates.
Okay, and the target is still 2% inflation, right? But we're at 2.7% now.
Exactly. So the implications for Bitcoin and crypto are, well, pretty clear based on standard thinking. If Powell reduces interest rates, very high possibility, I'd say, of Bitcoin and crypto prices pumping up. If he keeps rates the same, also generally seen as a positive signal, could support prices. But if he increases interest rates, that would definitely not be good, and prices would likely head down.
Makes sense. And the broader economy.
Well, it's worth noting our source mentioned that other factors, particularly U.S. employment rates under the Trump administration, are reportedly doing brilliantly.
Yeah.
So that suggests a strong economy overall, which Powell will absolutely have to consider alongside the inflation number.
Right. It's never just one number.
Yeah.
So given all this nuance, why does that Bitcoin as inflation hedge narrative stick around so strongly?
Well, fundamentally, high inflation does erode the purchasing power of fiat money, like the dollar. That's just fact. So it should logically make investors look for alternatives. And Bitcoin, with its fixed verifiable supply, it's an obvious candidate.
And big players are talking about it that way too, right? BlackRock, Vanguard.
Increasingly, yes. They're discussing Bitcoin in that light. When traditional savings aren't giving you much return because of inflation, Bitcoin's scarcity just looks more attractive. Plus, we've definitely seen adoption grow in countries with really unstable currencies during high inflation. Think Argentina, El Salvador.
Yeah, real-world examples.
And even on a macro level, things like rising electricity costs for miners, that can indirectly affect Bitcoin's supply pressure too. So you combine persistent inflation with maybe low trust in government monetary policies, and that digital gold story gets a boost. Our source pointed out that under the Biden administration, inflation hit, around 8%? Highest in 40 years? That kind of thing fuels the narrative.
Okay, so shifting from the macro picture to what companies are actually doing, let's talk industry spotlights. First up is potentially huge move, a $4 billion Bitcoin treasury involving a SPAC.
Right, a SPAC, special purpose acquisition company, basically a shell company that raises money through an IPO specifically to buy an existing private company and take it public.
Now, a quick heads up here for you listening. The source does emphasize a note of caution with SPACs. Early investors often do well, but people jumping in later can face risks, especially if founders cash out when prices rise.
Definitely. Always do your homework, maybe talk to a financial advisor. The SEC has warned about these things before, particularly with celebrity endorsement.
That point. So, the big news. Cantor's Equity Partner 1, that's the SAC,
Right.
is apparently in late-stage talks with Blockstream. Blockstream's a major player, CEO Adam Back. Some even think he might be Satoshi Nakamoto, though that's pure speculation.
Highly influential, regardless. And the goal here, a massive $4 billion Bitcoin treasury firm. The plan, as reported, is the SAC gets 30,000 Bitcoin, and they raise another $800 million or so to buy even more Bitcoin.
Wow. That's a serious amount of Bitcoin.
It is, and what's fascinating is how this fits into a bigger trend. We're seeing more crypto firms using SPACs to go publish and more companies adding Bitcoin to their balance sheets. MicroStrategy really paved the way there.
So what are the arguments for and against using a SPAC like this for a Bitcoin treasury for you to consider?
Okay, so on the pro side, proponents say it can bring in massive institutional demand, it adds potentially long-term holders to the market, and frankly, a $4 billion deal. That signals huge confidence to regulators, to Wall Street. It strengthens Bitcoin's narrative as a reserve asset, adds liquidity.
Makes sense. What about the against side, the risks?
Well, there are significant risks. You've got potential for excessive leverage. Poor execution could be devastating. SPACs often have shorter time horizons. What happens if Bitcoin's price drops sharply? They might be forced to sell, creating, unnecessary volatility.
Right, forced liquidation.
Exactly. Their speculative nature might also just encourage quick entries and exits, not real long-term adoption. Transparency can be an issue too. How are they managing the treasury? What's the leverage? What's the exit plan? And if you get a bunch of these SPACs holding lots of Bitcoin, you create concentration risk. Financial pressure on one could trigger sell-offs that hurt everyone. Plus, there's an ethical or philosophical argument some make. Shouldn't real Bitcoin adoption come from individuals and businesses using it, not just financial engineering by the super rich?
Lots to think about there. Okay, moving on to another big name. Jamie Dimon, CEO of JP Morgan. Historically, a massive Bitcoin critic, right?
Oh, definitely a detractor for sure.
But here's where it gets really interesting. Despite his personal feelings about stablecoins, he's now apparently saying banks basically cannot ignore them, not with fintech competition growing.
That's the shift. JP Morgan's already announced this limited deposit coin for clients. They're planning to explore broader stablecoin use just to stay competitive. Dimon himself even admitted they could offer faster, cheaper payments, even though, as he said, he personally prefers the old traditional systems.
And it's not just JP Morgan.
No, Citibank, Bank of America. They're also looking into stablecoins, tokenized deposits, potential collaborations. It's becoming a trend among the big banks.
And how does this tie into the bigger picture, maybe regulation? You mentioned Crypto Week.
Right. If we connect the dots, legislation like the Genius Act, part of this whole Crypto Week focus, it's significantly tied to stablecoins. Now, our source did express a personal concern here. If the big banks start issuing their own stablecoins, could they just end up replacing their own role, just in a digital format? And will they really follow the sort of ethics of open blockchain? It raises questions about whether there should be more space for, say, algorithmically backed stablecoins, too.
Interesting tension there. Okay, next big narrative, tokenization. Chainlink Labs, partnering with the Blockchain Association, which our source describes as a government entity, though it's more of an industry advocacy group, to be precise.
Right, an important clarification.
They've launched this Tokenize in America project. The idea is to create a state-level scorecard, basically tracking how different U.S. states are doing with tokenization and general blockchain adoption. Saw the announcement on LinkedIn.
Yeah, they're mapping progress across 6 areas, things like, do they have a crypto task force? Are they running blockchain pilots? What's the crypto workforce look like? Bitcoin reserve activity, seek congressional support, even ABA membership. And they'll rank states trailblazers, accelerators, initiators, explorers. Right now, Texas, Arizona, Utah are apparently the trailblazers.
What do the overall stats look like?
Pretty interesting. About 50% of states show strong legislative support for crypto. 36% has specific task forces, 22% are running pilots, and 16% are either exploring or actually acting on Bitcoin reserves.
And Chainlink's role here?
Well, their Cross-Chain Interoperability Protocol, CCIP, is highlighted. It's seen as a big innovation, merging oracles, enabling interoperability, and now they're extending that into tokenization. If you're a developer listening, the source suggests definitely checking it out.
But there's a question raised here too, isn't there, about permissioned blockchains?
Yeah, a thought-provoking one. Tokenization right now seems to be happening mostly on these permissioned blockchains, closed systems, essentially, which raises the question, does that really offer something fundamentally new? Or is it just, as the source kind of cheekily puts it, something you could do on Microsoft Excel? Is it true decentralization or just efficiency for existing systems? That's a key debate.
And globally, who's leading in tokenization?
Dubai is specifically mentioned as definitely leading the back-end organization, especially when it comes to tokenizing real-world assets.
Okay, let's switch gears slightly and look at the global market pulse. What are the numbers telling us as of, say, July 16th, 2025?
Right. So the total global crypto market cap is sitting around $3.75 trillion. That's actually down about 3.2% in the last 24 hours, likely reflecting that inflation news reaction. Total crypto market volume for the day is about $196.9 billion.
Okay, down a bit. Any positive signs in there?
Well, here's something interesting for you. The volume of stablecoins has increased significantly, and that $196 billion 24-hour trading volume, it actually looks pretty good, according to the source. This suggests that maybe a lot of people are converting crypto into stablecoins rather than cashing out completely to fiat currency like dollars. That's often seen as a healthier sign for the market long term. Okay,
less panic selling, more shifting within the ecosystem. What about institutional activity? ETFs.
ETF inflows for the day were pretty low, just $7.6 million. So institutional investors seemed not too keen on Bitcoin in the immediate last 24 hours. However, the source expects this metric could change drastically in the coming days because of all the focus during Crypto Week.
Right, waiting for more clarity, perhaps. Which brings us to regulation.
Exactly. President Trump's push for things like the Clarity Act and the Genius Act, plus a strong stance against central bank digital currencies, or CBDCs, that's all part of the narrative. The hope is that getting official news on these acts will provide that regulatory clarity, make high net worth individuals, institutional investors feel, more content, more willing to invest. For you listening, the source recommends following the House of Representatives, maybe on X, formerly Twitter, for official updates on the Genius Act, Clarity Act, and the Anti-CBDC Act.
And market sentiment overall, despite the price dip.
It's only shifted from green down to neutral, interestingly. The score is still 70, which technically means the market is in a state of greed. So that suggests there's still this underlying positive sentiment that could flip back pretty quickly with any good news.
Okay, what about on-chain activity? DXs, TVL?
Decentralized exchange, DEX, 24-hour trading volume is around $20.09 billion. Fees generated were relatively low, about $92.41 million, less than 0.5%. DEX dominance is holding strong at about 50.39% of total volume. And total value locked, or TVL, is generally trending upwards, currently at $129.42 billion. What's also interesting is the TVL connected specifically to real-world assets, RWAs. That seems pretty consistent no matter what the broader crypto market does. It's sitting at $12.92 billion.
Any standout DXs?
Yeah, looking at 24-hour volume, PancakeSwap has been leading for the last 3 months, apparently, with $7.38 billion. Then you've got Uniswap at $4.02 billion, Radium at $1.1 billion, Orca at $1.06 billion, and Fluid rounding out the top 5 with $812 million.
And stablecoins. Who's winning there?
Tether USDT still dominates massively, 62.14% market share, $139.94 billion in 24-hour volume. Circle's USDC is distant second with $17.5 billion and BUSD third at $9.8 billion.
Let's compare the big two, Bitcoin versus Ethereum. What are those dynamics looking like?
Okay, market caps first. Bitcoin stated here at $2.33 trillion. Actually, that seems high. Maybe a typo in the source. Let's assume it's meant to align with the earlier price, perhaps $2.33 trillion total market cap-related dominance, not just BTC. Ethereum's market cap has bumped up to $375 billion. Let's double-check that Bitcoin number. It's more likely around $2.3 trillion for the total market, not just Bitcoin. Let's stick with the dominance figures, which are clearer.
Okay, maybe focus on volume and dominance then.
Good idea. 24-hour trading volume. Bitcoin's around $90.82 billion. Ethereum's is almost a third of that. $36.53 billion. Dominance-wise, Bitcoin's has picked up pace, now at 63.03%, but Ethereum's has also increased up to 10.9%, so maybe other smaller coins are losing ground to both.
Interesting. Could Ethereum be seeing its own institutional interest narrative building?
That's a great question the source raises. Could the second half of 2025 see a new narrative around Ethereum treasury funds? You know, institutions buying and holding Ether on their balance sheets, like MicroStrategy did with Bitcoin. The source even kind of jokes maybe we'll get Dogecoin treasury firm news next, though probably not serious.
Yeah, maybe not yet. Okay, What about active addresses? Where's the actual user activity happening?
Right. Looking at the top 5 by active addresses across different chains gives a sense of usage. Number 1 is Solana, 3.2 million active addresses, which the source notes makes sense given its high transaction volume. They mention a recent example of raising $500 million in just 12 minutes on the chain.
Wow.
Number 2 is Tron, 2.62 million. 3 is BNB Smart Chain, 2.12 million. 4 is Base Network, 1.12 million. And number 5, Bitcoin, 797,345 active addresses, notably below the 1 million mark.
Okay, so what does that relatively lower number for Bitcoin mean? Is it bad?
Not necessarily. The source suggests it could actually be a positive sign. It might indicate that people are ho-chi-ling, holding on to their Bitcoin, especially now the price is well above $100,000 rather than actively trading or transacting with it daily.
Right, more of a store value behavior than medium of exchange. Let's get some quick price updates on the key cryptos. Bitcoin.
Current price around $117,384. It's basically flat, down just 0.07% in the last 24 hours, but still up a healthy 8.23% over the last 7 days.
Ethereum.
Ethereum's at $3,019. Now, this is interesting. It pumped up 5.59% in the last 24 hours, despite those slightly higher inflation numbers. And it's up almost 20%, 19.83% in the last week.
Okay, showing some strength there. What about Ripple XRP?
XRP is at $2.89. It's up 2.37% in the last 24 hours and a really significant 25.59% over the last 7 days. The source attributes this strong performance to Ripple's aggressive moves lately in stablecoins, tokenization, and even talk around ETFs.
Okay, shifting focus again, regional developments. We mentioned Dubai earlier. Let's look at the broader Middle East too, starting with Bahrain.
Right. Bahrain's central bank, the CBB, they just issued a new framework back on July 4th. It's specifically for licensing and regulating stablecoin issuers.
That sounds pretty pioneering.
It is. And what's really fascinating, according to the source, is how they're approaching it. They're focused on the safe and sound integration of stablecoins into their existing financial system. The framework allows licensed companies to issue stablecoins backed one-to-one by fiat currency, like the Bahraini dinar. The whole point of the regulations is to mitigate risks, create a safer environment for digital assets, and really boost investor confidence.
So they're actively trying to become a hub.
Exactly. The CBB is positioning Bahrain as a leading financial hub in the whole MENA region, Middle East, and North Africa. They're emphasizing innovation, but with comprehensive oversight. For you listening, if you want the details, the new model is apparently in Volume 6 of Capital Markets of the Central Bank of Bahrain Rulebook on their website, cbb.gov.bh.
And any broader considerations raised about this?
Yeah, the source brings up a recurring point. while it's positive central banks are engaging with stablecoins, the challenge of audit is huge. Like, who does the audit? Should the reserves backing the stablecoins be publicly viewable 204/7? Big questions. And again, that idea that stablecoin issuers are literally replacing the role of a bank comes up, with the source personally feeling there should be more room for algorithmic stablecoins too.
Okay, and sticking with the region, but shifting to education and AI Dubai.
Yeah, this is quite cool. GMS Winchester School in Dubai. It's become the first school outside the UK to get this golden AI quality mark. It's awarded by a UK group, the Good Future Foundation, and it basically celebrates the school's really deep, systemic and ethical integration of AI across everything they do.
Not just teaching coding, but really embedding it.
Exactly. Curriculum, operations, safeguarding. The whole approach involves staff, students, global collaboration. It positions the school, which is part of the GMS Education Network, apparently the world's largest K-12 private education group, as a real leader in AI education in the UAE. They did a lot to get there. School-wide participation, integrated AI tools, age-appropriate reviews, even appointing specific AI champions.
That's definitely positive news. Good to see that focus on educating the next generation, starting young. Phew. Okay, we have covered a lot of ground today. From those inflation number nuances and the surprising crypto reactions to those really audacious corporate plays in Bitcoin treasuries, Jamie Dimon's, well, evolving stance.
Yes, the evolution continues.
And that global race to tokenize assets and also integrate AI, like we just heard from Dubai.
Indeed. It just shows how quickly this whole landscape is changing, doesn't it? You've got traditional finance sort of grappling with these new digital realities and just innovation popping up everywhere. All corners of the globe. The market numbers, they're always going to be in flux. But understanding the forces behind them, the narratives, that's really the key.
So what does this all mean for you listening in as you're navigating this, rapidly changing world of finance and tech? Maybe consider this. You've got this complex interplay of traditional economics, bold crypto moves by companies, shifting regulations. What does value even mean in this increasingly digital world? And how might your understanding of it need to adapt?
That's a great question to ponder, and we really encourage you to dig deeper. Check out the sources we mentioned, the Bureau of Labor Statistics website for inflation data, for instance, or, follow the House of Representatives on social media for those official updates on key legislation like the Clarity Act or Genius Act. This deep dive, it was really crafted for you. We hope it equips you with the knowledge to make better sense of all these dynamic shifts happening right now.